So what happened today? Let's talk about a couple of key items that I believe happened today in the economic financial world that I think are worth sharing with the audience. So let me jump into it quickly. The stock market finished in the green today. Dow Jones up 383, S&P up 60. The NASDAQ finished up 246. It's about a 1.4%. The gold rallied again today, $12.90 per troy ounce, closed at $3,048. If you guys are holders of gold and silver, please leave comments below. Hashtag gold and silver. I love to hear from you guys. You know I'm a big proponent in that. The 10-year yield was down. I saw 3 basis points at 4.27%. So I guess the top story today, from my perspective, depending on how you look at it, or one of the top stories, was the Federal Reserve chair meeting and the results from that, and then some of the comments that Jerome Powell made after the meeting. So let me jump right into the CNBC article that was published a few minutes ago on this, entitled "Fed Holds Interest Rates Steady, Still Sees 2 Cuts Coming This Year." And the stock market, and I'll get into it in a second, did rally on this news, although it was a bit more hawkish in tone as to, when and if these rate cuts, would actually be implemented. But the Fed announced a pretty substantial move in its QT, or quantitative tightening cycle. We'll get to that in a second. So CNBC says Washington, the Federal Reserve, in a closely watched decision Wednesday, held the line on benchmark interest rates, though still indicated that reductions are likely later this year. Faced with pressing concerns over the impact tariffs will have on a slowing economy, the rate-setting Federal Open Market Committee kept its key borrowing rate unchanged. Rate targeted in a range between 4.25% and 4.5%, where it's been since December. Markets have been pricing in virtually zero chance of a move at this week's 2-day policy meeting, so no surprise there. Along with the decision, officials updated their rate and economic projections for this year and through 2027, and altered the pace at which they are reducing bond holdings, and that's the QT portion of this, which we'll cover in a quick second. As officials said, they still see another 0.5 percentage point of rate cuts through 2025. The Fed prefers, it says, to move in quarter point increments, quarter percentage increments. So that would mean 2 reductions this year. I think markets are pricing in a pretty good chance of a cut at the June meeting. It says investors took encouragement that further cuts could be ahead, with the Dow Jones average rising more than 400. Again, I closed up 383. Yes, 383. However, in a news conference, Chair Jerome Powell said the central bank would be comfortable keeping interest rates elevated if conditions warranted it. So again, why did the markets rally today? I'd love to hear your thoughts and comments. I think it has to do with the quantitative tightening issues. As a post-meeting statement, the FOMC noted an elevated level of ambiguity surrounding the current climate. Quote, uncertainty around the economic outlook has increased. The committee is attentive to the risk on both sides of its dual mandate. After the news conference, Powell says noted that there had been a moderation in consumer spending. That's his quote. Moderation in consumer spending, anticipates that tariffs could put upward pressure on prices. So now we're blaming tariffs, which haven't even been fully implemented yet, to blame for the upward price momentum. Now, it's interesting because I did see a Zero Hedge article. I highlighted one statement from Powell that did not make its way into the CNBC article, but the Zero Hedge article was entitled Fed Holds Rates, Signals QT Taper, Blames Trump for Uncertainty and Stagflationary Outlook. But Powell said in his comments, he said, we do not want to, he says the Fed does not want to get ahead of surveys showing lower consumer sentiment. So far, he argued, the hard data is solid. So here we have the central banker telling you, right, and telling me that the pain that we're feeling every day for the cost of food, the cost of insurance, the cost of health care, all those things that are not moderating, we're really not feeling that pain, right? He says, we don't want to get ahead of surveys showing lower consumer sentiment. Why pay attention to surveys, right? That just happens to be, and I'm being sarcastic, but you know, it's obviously a huge insult to all of us that the Federal Reserve would say that, well, you know, we're not gonna really take those consumer surveys too seriously. The CNBC article goes on and says that the collective group of Fed heads downgraded its collective outlook for economic growth and gave a bump higher to its inflation projection. Officials now see the economy accelerating at just a 1.7% pace this year. That's down 0.4 percentage points from the last projection in December. On inflation, core prices are expected to grow at a 2.8% annual pace, and that's up 0.3% point from the previous estimate. So they're projecting the growth to be down or decelerate, and inflation to accelerate or increase, okay? So it's no wonder why gold, again, put on another $12 an ounce today on that news, and on the news that they're looking at probably a couple more rate cuts this year. Let me talk about the QT, or quantitative tightening. It says, in addition to the rate decision, the Fed announced a further scaling back of its quantitative tightening program, in which it's slowly reducing the bonds it holds on its balance sheet. Central banks now will allow just $5 billion in maturing proceeds, it says, from treasuries to roll off each month. That's down from $25 billion each month. However, it left a $35 billion cap on mortgage-backed securities unchanged, a level it has rarely hit since starting the process. And one of the analysts came out and said the Fed indirectly cut rates today by taking action to reduce the pace of its runoff from $25 billion a month to $5 billion a month. And that's according to Jamie Cox, managing partner for Harris Financial Group. From my layperson, non-economist perspective, that's the reason why you saw a jump in the stocks, in the stock market today. It says an uncertain air over what's to come has dimmed the confidence of consumers, right? Okay, we all know this, who in recent surveys have jacked up inflation expectations. Bank of America, and I'll close with this on this topic. Bank of America CEO Brian Moynihan earlier Wednesday countered much of the gloomy talk recently around Wall Street. Listen to what this guy says. The head of the second largest U.S. bank by assets said credit card data shows spending is continuing at a solid pace, with B of A's economists expecting the economy to grow around 2% this year. Again, these guys equate, or I should say conflate, consumers' use of credit cards, with prosperity and growth. You use that, I suppose they use as a metric of growth for the economy, when we all know what's happening is consumers are getting further and further into debt, okay, which from any metric is not good. Let me quickly jump into the second story I want to share with you today, which I think is huge news. Oftentimes on this channel, I do cover cryptocurrency as another form of potential assets to invest in. And those shows don't seem to get much traction. So I do have a feeling or suspicion that most of the viewers on this channel are not interested in that. But look, it's going this direction, okay? We're going to get the stable coin. We're going to get continued adoption of cryptocurrency, the big ones, I think, in my opinion, by large institutions. ETFs are going to be now going to start coming online at a faster pace. So let me share the big news on XRP today. Any of you that pay attention know that the SEC for many years under Gary Gensler was pursuing a massive lawsuit litigation against Ripple again, not speaking from layperson perspective, trying to deem it as a security. Litigation's been protracted, but it's really frozen in place a lot of institutional investors, a lot of people on the sidelines because of the uncertainty surrounding the litigation. Anyway, today, story from again, CNBC, although it's all over the media, it's all over YouTube. I think I saw 50 YouTube videos, probably, or maybe 25, immediately hit the wire when this news came out this morning. XRP surges after Ripple CEO Brad Garlinghouse says SEC is dropping its lawsuit against the company. As of recording the video, XRP is up about 12% today. It says XRP surged after Garlinghouse said that the SEC, Securities Exchange Commission, is no longer pursuing its appeal in the case against the payments company. It's been almost 4 years, Garlinghouse said, been almost 4 years and 3 months, since the SEC originally sued us. Certainly a painful journey for in lots of ways, Garlinghouse said. I really deeply believe that we were going to be on the right side of the law and on the right side of history. He says the system just feels broken, that we had to fight this fight for the industry, and you had an SEC attack in the industry, particularly the Ripple case. He continued. There were no victims. There was no investor loss. They were just not acting in good faith. So again, they had a partial victory back in 2023 when U.S. District Judge Annalisa Torres handed down a decision, was hailed as a landmark win for the crypto industry. Still, while XRP at that point was not considered a security when sold to retail investors on exchanges, it was considered an unregistered security offering if sold to institutional investors. So this development comes as the SEC moves quickly to reverse much of the damage in the crypto industry left by the previous administration. Last month, the agency ended its enforcement case against Coinbase, closed investigations into Robinhood's crypto unit, Uniswap, Gemini, and Consensus with no enforcement action, and scaled back its crypto enforcement unit, declared meme coins are not securities. This week, the newly formed SEC Crypto Task Force will kick off a roundtable series focused on defining the security status of digital assets. Okay, it says XRP coins were the biggest beneficiary of the post-election Trump trade, up more than 385% since then, and up 18% on the year, up around 12% today as of recording this video. Whether or not you guys are into cryptocurrency, again, it's another element of the current administration that is shifting course. Okay, and so there are repercussions, there are things happening, and we're having a phase shift. Okay, in the crypto world as well. So if you guys have considered it, have not considered it as a strategy for investment and returns, look into it. Not financial advice, not trading advice. I'll leave it there today, about 14 minutes. Thanks for watching the video, supporting the channel. I appreciate the likes. I appreciate the thumbs up, and I do appreciate you subscribing to the channel. All right, with that said, I'll certainly be back throughout the week to continue updating you on events as they unfold, and a lot's happening. All right, talk to you soon. Bye.